Okay. I need to line this up. There we go. Like this. Like that. This. And like that. And like this. Okay, that should be good. Yep. I think so. I didn't catch it. Okay. Welcome to my YouTube channel. I don't know how to do an introduction, but this is, I'm gonna just get into the video. This is a trade recap of Friday the 19th of April. I trade between 7 a.m. and 12 p.m. New York time. It's currently 2:24 for me. New York is an hour ahead. Yeah, so how it usually goes, I wake up at like 5:30 or like 5:20, sometime around that. And then I wake myself up and then I just wait until 6 o'clock my time, 7 o'clock New York time, and then I just see what's going on. I see where price is, and in this case, I always go on the hourly first. I don't look at the daily too much. Maybe sometimes. Don't mind all of that stuff. Maybe sometimes, just to get an idea. To explain what I look for in the daily chart, now that's a different story. I don't really, I just like take a peek at it and just whatever I come up with. Like for example, like let's say we were over here, and then I just look at this. Okay, well there's a fair value gap, price is right there, so price is probably gonna reject that area, you know what I mean? And for this, I got a couple buys, I guess. Where's the others? They're not coming. Yeah, some sells, but you know, that's why I don't really use the daily too much. It's not much of a confluence for me. But back, and then 4 hour, kind of the same thing, but it's a lot better, to be honest. Like when you see like this, okay, there's liquidity, you know what I mean? Like things to look for, you know, to keep in the back of your head to see where price may or may not go to. But yeah, oh, this is April. Anyways, let's go back to the hourly, my hometown. Okay, yep, so let's say I wake up 5:20, look at the charts where is liquidity, right? So pretend all of this is just not here, okay? So we're right here at this I need to get the subscription for TradingView. I don't have it, so that's that. As you can see, an ad popped up. Anyways, so I mark out, here's sell stops, and then here's buy stops. Here it goes. Here's buy stops, and then let's say price is at this candle right here. I just have these two marked until one of them gets hit. In this case, sell stops got hit, so after that gets hit, I go down to the 5 minute. Okay, go to the 5 minute, and then I wait for this pattern. We can get rid of this. I believe it was, so here, so this was a liquidity grab of a previous low, and then after this grab, it breaks. No, man, it couldn't have been this. Was it this? Yeah, I think it was. Or was it this? No, it might have been a better idea to... Oh, well, there's that. And also just downloaded OBS. I think it'd be better to just look at these screenshots. That way I can actually see, because I don't really remember. And I took screenshots of everything about the trade recaps I'm gonna go over. This can just load a little bit. Okay, yeah, I knew it. I knew something was wrong. Yep. So there's what we're about to break down. So price got swept, came up, came down, came up, came down, went below this higher low of this liquidity, and then here we go, external liquidity. That's just what I call it. It's really just liquidity. I mean, people have their names for everything, but yeah, there's that. And then after this liquidity sweep, I look for a break of structure. An impulse break of structure would be better, but like, let's say I was like looking at this high price. Where's the brush tool? Where's this at? I don't like using the brush, but considering you guys can't see my finger pointing at my screen, I believe it'll be better to use a brush. Oh, there it is. Okay, so let's say we're looking at this high being broken. This right here. Oh, no, that's not really good. This little major move up above this high, that would be considered an impulse to me. Now, how do I get out of this tool? Okay. Just delete this stuff. That would be considered more of an impulse to me, but as you can see, it wasn't really impulsive above this area, above this level right here. But it broke the structure nonetheless. So here's, I call it a market structure shift. A market structure shift is more like okay, back to the brush tool. There you go. So like the structure is like this, zigzagging down, you know what I mean? And then, actually let me do this better since we're on the 5 minute. Structure is like this, moving downwards, lower lows, lower highs, and then boom. The previous high got broken, so this is really the market structure shift, and then this break going up, passing this one on this previous high. This would just be a break of structure, a continuation of structure. There's all types of words that you can use, but I just generally call it a market structure shift. It's not really important what you call it, as long as you understand what it is. This is just how I understand it, just market structure shift. And then after this, I always use this Fibonacci. Let's make this look better and extend it a little bit. Okay, I always use this Fibonacci. This is the optimal trade entry by Fibonacci that I got from ICT. This whole strategy is ICT strategy, the one that he went over in the 2022 mentorship. That playlist is basically just the liquidity sweep, which is these sell stops that I marked out on the 1 hour chart, and then this forming this pattern. And yep, that's all it is. Learning a strategy in Forex, the foreign exchange market trading, it's not too hard. You just need to engrave it into your brain, the words and definitions, and then once you do that, it'll all become like common sense, like, oh, okay, now this makes sense. I definitely don't recommend indicators. If you want to use moving averages, I guess I see a lot of people doing that, but personally I just think you'll learn a lot more just learning straight price action, which is what I'm showing you here. And you know, you're doing these drawings and things like that. You could always DM me on my socials. I'll put them in the description and I'll answer any questions. But yeah, back to the trade recap. So you have this market structure shift. After this shift, you want price to retrace into this area. Now, price doesn't always retrace into this area, these three zones. Sometimes it will just retrace here perfectly and then move up, which I will show you in later videos of my other trade recaps. I have about like 7 or 8 to go through, so you'll see what I'm talking about in later videos. But as far as this one, it retraced back into this zone, but I entered on this fair value gap right here. So to break it down, a fair value gap, as you can see, there's a gap, right? You have this I think my cursor, it'd be better for you guys to see if I had my cursor not a straight line. How do I do this? No, I don't think it'll be here. Oh, it will be here. Okay, dotted. I think that'll be. Is this too? Whatever. Well, not whatever. I think this is good. You guys can see my cursor and the grid lines aren't in the way. I mean the lines. What was I talking about? This fair value gap. So you have this candle, this bearish candle, you have this bearish candle, and you have this bearish candle. Just focusing on these three, right? So you have this wick. So for those who don't know, this is the body of the candle. This is the wick of the candle. The whole thing together is a candle or a candlestick. So you have this this wick, and then you have this wick, right? In many cases, many cases. Oh, I did not mean to do that. In many cases, we're looking at these three candles, right? You have this wick, and then you have this wick, right? No gap. There's no gap because, where did my brush go? There's no gap because, I mean, there's no gap between this wick and this wick, right? Because price went down here. Price came down here. You know what I mean? So for that reason, there's no gap. But let me delete these. But when it comes to these three candles, now these three are special, right? Because these three occurred after my pattern, after a liquidity sweep of the sell stops, right? There's a nice specialty to this gap. It's very special, right? And that's why you need to mark it down. There's a gap, right? There's space between here, right? Price came through this, obviously, right? So you had this candle, the high of this candle. Price came down to the bottom of this wick, right? And then price came up to this wick, and then price opened here, and then came down here. But it didn't go past, which left a gap between this wick and this wick. It just continued up, right? And when we go back to the other ones, it was these three. Price opened, came down, came up, opened here, came down, came up, it opened here, came down, came up, you know what I mean? What I forgot to do is emphasize the fact that it came down because it leaving no gap, right? So if there was a gap, if, right, it's an if situation, right? Let's say there was a gap, the wick came, oh, I thought I had the wick came here, right? The wick came here, and then prices came up, right? And then just went up. I actually lost my train of thought. That's kind of crazy. This is another piece of advice. Never mind. It's not a piece of advice. It's another lost train of thought. Just focus on this, right? I could even confuse myself. You just focus on this, right? This gap, right? You see this gap? You don't see a gap, right? But you see a gap. So, I mark it down. I think I spent like 4 minutes talking about a gap, but this is the gap, right? Called a fair value gap. Okay. Oops. And back to the Fibonacci, right? I was talking about these zones, price not coming down to these zones because I usually just enter at below the below the 50% of the move that broke structure. The move that the market structure shift, that move, this move up, I put my Fibonacci from the bottom to the top, right? Bottom to top. I'm just extending it out. Yep, bottom to top. So this, anything below this 0.5, this is the 50% of the range. Above this is 50 to 100%. This is 50 to 0%, right? Anything below is discount, anything above is premium. In this case, I am looking for a discounted entry because it is below the 50% of this range. Okay, hopefully that makes sense. So I find anything. Now this is one confluence, this Fibonacci, and then this is another confluence, the fair value gap, right? Sometimes it'll be order blocks, sometimes it'll be inverse fair value gaps. I mainly just do fair value gaps and order blocks because those are just what comes to my eye the most, right? Like for example, you could have done right here, right? This is an inverse fair value gap. It was a fair, so what an inverse fair value gap is, why is it doing that? Oh, okay. What an inverse fair value gap is, so we come down, right? We make a gap. I don't know if you can see, but there's another gap, right? Pretend these green candles are not here, okay? Everything from this candle to the right is gone. It's nothing. It's fairy dust, okay? So you have this fair value gap, and let's say price comes down, it leaves a fair value gap. Usually in a case of a fair value gap, it'll be respected like this one was, and then it'll continue in the direction, right? So in this case, what would this fair value gap should have done? Should have went like this, coming into the fair value gap and then coming down, but it did not. It came down, it went into it, and then it broke it, right? So instead of a fair value gap, it's an inverse fair value gap, because when you extend it, oops, I'm pressing shift. When you extend it, after a fair value gap that gets broken, you just extend it, and I feel like 7 times out of 10 it'll have some type of reasoning behind the next move up, which as you can see, it came down, it kind of respected it, broke past it, and then it followed the bullish direction that you thought was gonna happen. Okay, yeah, so that's the inverse. I'll have a video going into these things more, but just for the meantime, I'm kind of rambling, aren't I? It's been 20 minutes, Jesus Christ. Okay, so this is what I entered on, right? So I entered on this fair value gap because it was below the 50%, and yep, it was below the 50%, and there was a fair value gap, right? So those are two confluences. There's a few confluences. I'll be going over it in another video. For now, I'm just going over this trade. Some other time I'll go over my strategy. It's nothing complicated, as you can see. I'm just explaining it a lot, so it sounds complicated, but it's really not. It's just there's a lot of thoughts that come to my head when I'm thinking about my strategy, and I'm just speaking them out. Anyway, so yeah. So when I trade, I typically go for a 1 to 2. In fact, every time I go for a 1 to 2. So, oops, keep doing that. Yeah, so for my stop loss, I always put it below the low that is connected to this breakup structure, the market structure shift, yeah, I mean, there's not really an or. I think in every situation I always put it down here below this low, but other times, you know, I might there might be another low right here. Actually, no, there isn't. Never mind, I take that back. I always just put it below this low. You'll see in my other videos, or maybe I'll prove myself wrong as well, because I actually don't remember my other trades, but they happened. Besides the point, I always go to a 1 to 2. So first I put my stop loss here. Like, I don't like to put it exactly here. I like to go a little less, I mean below it in this case. This is just on my trading view, but on where I trade through KOT Forex, and they use Trade Locker. There's spread on this, obviously, so this price is like this price, if you know what spread is. I'll also go over that in a later video, maybe, because I don't really pay attention to it. I just enter and I exit manually. So yeah, so here is a 1 to 2, as you can see. Wait, I'm looking at this picture, and oh, that's why, because I entered on the fair value gap, not the, oops, see daisies. Okay, there we go. That's more like it. You get the point. Even if I went down here, or I went, you know, like up here, the trade got hit, the 1 to 2 got hit. I always go to a 1 to 2 on my risk 1%, and in the rewarding I get 2%, obviously 1 to 2. But yeah, so this was that trade. Not much else to say, but yeah, if you watch this all the way through, I'm surprised. 23 minutes is a long time, but this is my first recap video of my trades. There'll be many more. I'll probably do them every other day, maybe every day. Might spread out the content some more. But yeah, thank you for watching, and this has been great. My first video completed.